Welcome to the New York Stock Exchange. I'm Jane King, and today we're talking to Rohan Malhotra, founder and CEO of Roadzen. Roadzen is ticker RDZN on the NASDAQ, and it's a pleasure to see you back here in person. You had a good quarter, beating expectations, it looked like, across the board by a lot, actually. So analysts were expecting revenue of $12 million. You delivered $13.7 million. It was almost a 26% sequential increase compared to the first quarter, 15% increase year over year. So what would you say went right for you in the quarter?
I think we focused on three things in the last full year: is increase revenues, bring in high quality contracts into the company, and extend our leadership in AI innovation for insurance and mobility. I think the company is doing a very good job of making sure we meet those expectations. And what you see in the quarterly results, with $13.7 million revenue, with an adjusted EBITDA loss of roughly $1 million, and we are trending to break even. This is our fifth straight quarter of EBITDA gains, and we expect the company to hit break even in the next quarter. And so this is kind of like a big deal for us. This is the kind of thing we've asked investors to focus on. And we think as the company grows, today we're at a run rate of 55 million in annual revenues. We want to grow towards 100 million in annual revenue run rate. And we believe we will be one of a very few AI companies in the world that have, let's say, 50 to 100 million revenues, are trending to break even, and are continuing to innovate with fundamental and real innovation in insurance and mobility. So we think that's kind of the story for this quarter.
What can we expect for the top line then for the remainder of this year and into 2026?
Well, we haven't given guidance on that, but we, believe, as analysts are expecting upwards of $60 million in revenue, which would be above 40% growth from last year. We would expect to hit adjusted EBITDA break even for the year, and we think like those are the metrics to track. One of the things is we announced a couple of major deals, one with a very large automaker, an acquisition. Those are not yet even figuring in our results because we just announced those. These will start contributing. So we anticipate we can hit the revenue numbers and the EBITDA numbers that I anticipated from the company.
And also noteworthy was consistency in reducing losses. So it's your fifth straight quarter of adjusted EBITDA improvement at roughly a loss of just $1 million for the quarter. So it was about half of what you were last year at this time. So you're close to profitability, right? I mean, what are your thoughts on that?
I think, look, when we went public, we were at a $3 million adjusted EBITDA loss. Now we are at, last 6 quarters, we've seen sequential gains. We're at 1 million of adjusted EBITDA loss. So you can see a straight path that as we are gaining revenue, we've done incredible job on cost control, and we are using AI internally in the operations to actually increase leverage. So we don't have any big investments to make. Every new dollar of revenue we bring in increases our margin, increases adjusted EBITDA, and that's kind of the key story. So we are not just building AI for external clients, we are using it internally to reduce our costs and to grow revenues. So when you see that figure, it's actually the result of multiple quarters of work that we've put in building our internal operations to that capability.
Yeah, well, and the balance sheet gets healthier, it seems like, every quarter. And you raised money in this recent quarter, too. So that was straight equity, no warrants. It was a premium to your stock price as well. So, and you had one of the only remaining risks taken off the table. So it was an $11.5 million senior debt, which had been extended from December 25 to June 2027. Yes. So what's next in terms of the balance sheet?
Well, I'd like to re-emphasize, we raised $11.5 million, 4.5 at the NASDAQ parent and $7 million in our India subsidiary. For the 4.5, the 4 largest shareholders of Roadzen, we put in capital ourselves, and that was at a 25% premium to market. When we did the India deal, that would imply a 100% premium to market, and we brought in some of the best technology investors into the company. So the important thing is we are bringing in fundamental investors who understand and love the story, and that's kind of, what we would like to continue to do. In terms of the extension of the senior secured facility, Mizuho is our senior lender. They've been a very supportive partner to us. They extended again for 18 months from December 31 to June 2027, which is, I think, for shareholders, that's always a question, right? Are the senior lenders of the company supportive? And the answer is yes, Mizuho has been a very supportive partner to us.
Yeah, definitely an important piece of the puzzle here. So what comes next? I mean, you've clearly, the trend is going in your direction. What's kind of on your radar screen or your strategy for the rest of this quarter and also next year?
Well, we now have a very simple focus, is we are going to focus on the US market. Our India business is growing very well. We announced a major, one of the top 5 global OEMs has signed with a UK business to implement an insurance program for them in a major European country. And now we are going to start focusing a lot on the US business. The acquisition we brought in, the value of the contracts. US is really the large prize in insurance. It's a $300 billion auto insurance market. You know, just about 4 days ago, there was a report that auto insurance premiums for passengers on average have hit $2,400, which is the highest on record. Commercial auto premiums, we are writing policies at $50,000 a policy. So these figures are just becoming unsustainable for US consumers and businesses. It's one of the highest contributors to inflation. So we anticipate bringing our technology in will really change the paradigm for the US market. And remember, this is the largest market in the world. Our margins are the highest here. So you will see both revenue improvements, margin improvements, and bottom line improvements as we continue to build out the US market. And with this acquisition, which, we are going to start, bringing in from the January quarter, we anticipate to see significant growth in quarters ahead.
Well, let's talk about the acquisition since you brought it up. So now I understand, it's high growth mode, immediately additive to the company. Consolidation will be smooth. So let's talk about that. Why was this a strategic acquisition to make?
Well, number one, it's a creative tuck-in acquisition for us. We have 2 business lines across the world, right? We sell our technology as a SaaS player to car makers, to fleets, to insurers, and we act as a MGA or an insurance broker and sell policies that are underwritten using our tech, are sold using our tech, and then when claims come, they're processed using our tech. And in the US, we did not have that piece meaningfully contributing. We wanted to bring in a team with the expertise in the US market. In the US, you need to get licensed state by state. With this acquisition, we get 4 states licensing capability. We're going to expand that a lot more. So what we are anticipating is we want to be the dominant players in commercial auto in the US. And that's what really this acquisition will enable us to do.
And finally, what would you just like to share with investors, shareholders about both the acquisition as well as your earnings and going forward?
I think look forward to the similar kind of trend. We're going to improve revenues, improve EBITDA, improve margins, and focus on growth across the world. But specifically, our US and India business are going to continue growing at a good pace.
Okay. Rohan, thank you so much, and congratulations on a good quarter.
Thank you.
We've been talking for a couple of years, and I know you worked really hard. So
thank you. No, it's been hard work, and we are glad we are turning the corner here.
Okay. Thank you so much.
Thank you.